What's going on and welcome to the channel. This is actually the first video that I'm making on this channel, so welcome to Market Profits. Hopefully this is the beginning of something big. I plan on posting every single day, but I'm not going to waste your time with that. If you're new, subscribe to the channel, turn on post notifications so that you don't miss out on any future videos. Give the video a thumbs up, leave a comment, just help out the algorithm. We're really help out the channel. But let's go ahead and talk about these three stocks that are insanely undervalued, and one of them with upwards of 660% upside, which is insane. So let's go ahead and just kind of talk about the market as a whole. Everything's been down pretty bad recently, but today we had an incredible day. As you can see, everything was green almost, except for things like Meta, which was down 4%, but we had companies like Tesla up 9%, ExxonMobil up 6%, Apple up 3%. Big companies making big moves in the market that we really, really enjoy to see. But let's go ahead and talk about the first stock on this list, and that is going to be Upwork, ticker UPWK, currently trading for $19.14. I am currently invested in this company, but I do believe in the upside potential, and I continue to buy the rips and I buy the dips, and I am not selling at all. So technical analysis wise, we're sitting on pretty fair value on the RSI. MACD catching a little bit of momentum. It did almost lose it, but we're still sitting pretty solid. Looking at some kind of easier looks, up about 1.5% today alone, and some news that we just recently saw, a freelancer on Upwork earned $1.6 million, which is insane. And we'll go ahead and talk about who Upwork is after I mention they have a market cap about $2.5 billion US dollars. But who is Upwork? So what Upwork does is they allow users to kind of go to their website, and if they need something for their business, maybe you need a logo design, or maybe you need a pitch deck for your company, whatever it is, Upwork connects you to somebody who can do this task for you, and you pay them on an hourly basis. So for example, if you need a logo design for your company, you would go to Upwork, you would hit this find talent or find work. You'd hit find talent actually, if you need to find somebody to work for you, and you would go look up logo design, and you'd pay somebody $20, $15 an hour, whatever their prices are, and you would get your service, and Upwork makes money by taking a small commission of that. So let's go ahead and talk about Upwork further. As we saw, they have a 1 year target estimate about $32.18 and a market cap of roughly $2.5 billion. Now, their profitability is actually in the negatives, which all three companies that we're talking about today do have negative profits, which in my personal opinion, it's not always the best thing you want to see, but I'm not in these companies for the profits. These are quote unquote riskier investments and riskier bets. But let's go ahead and get further into it. So quarterly revenue growth year over year is 24%, which is really good stuff. And their cash to debt is looking really good. So they're in a nice financial situation. But looking further into this company, quarterly revenue growth is continuing to increase quarter over quarter, no matter the economical situation. Like we're seeing interest rates rise, inflation go crazy, but Upwork is continuing to be consistent in making growth in their revenue quarter over quarter. Looking further into Upwork, we're seeing expectations of profitability coming up from negative 16 cents per share to positive 22 cents per share, and revenue expected to increase by about $150 million from 2022 until 2023. So how are institutionals kind of taking this activity? We're seeing a lot of institutional buying activity, 1.34 billion over the past year compared to only 576 million sold in the past year. And you can just see the inflow is definitely outweighing the outflow. We have some big players selling, which is a part of the process, but we also have some big players buying in. One big player that I can mention is State Street. They're being pretty big right now. We have people like UBS selling. We have Rentec, the best performing hedge fund in the world, buying in, up in their position of 26%. You have Charles Schwab buying in more. I saw JP Morgan earlier. They were buying in more. So we have big players betting in on Upwork, which is really good stuff. And on Morningstar, it says that they're at about 42% discount. Fair value of roughly $32.50. And price targets from analysts are looking really good at $30.10 per share, giving the stock 57% upside. Let's go ahead and talk about stock number 2. And I'm going to go ahead and type that right here. And that is going to be, I'm sure you've heard of it before, that is going to be NIO, the EV company from China, making massive rips in the market recently. going from like last week at 16 per share up to $22.66. The momentum is still there, about to reach that overbought territory on the RSI, but we're still looking very good. They have a market cap about 35 billion US dollars. And today alone, they went up 9%, which is just insane. Their profit margin is still in the negative, negative 19.76%, and quarterly revenue growth of about 24.2%, which is really good. And their cash to debt is really good also, but this is not in US dollars. It's going to be in Chinese yuan, if I said that correctly, but this is kind of the conversion rate for that. About 15 cents is one Chinese yuan, if I'm saying that correctly, but that's kind of the currency that we're looking at right now. And NIO, just to give you a look at their vehicles, this is what they do. They sell electric vehicles, they have these charging stations, they have these battery swap stations, they have a lot of upside potential. But let's go ahead and look at their financials. Revenue growing quarter over quarter, just like Upwork, which is really, really good, especially in the situations that we're seeing right now. And the analyst forecast going from not so profitable to not as much not profitable. So reaching closer and closer to profitability and increasing sales by a lot in expectations over the next year. Morningstar gives this company a 25% discount, saying its fair value is roughly $27.86 per share. And price targets are 61.97% upside with 14 buy, 0 hold, and 0 sell, which is insane, insane stuff. Let's go ahead and look at the final company on this list. And that is going to be more of a risky investment. It's actually an over-the-counter. That's going to be Voyager Digital, ticker VYGVF, a penny stock. It's worth right now $1.22, been down to 94 cents. But if we go ahead and look at their overall activity, like years, it went from very, very cheap, like almost less than a cent. It was less than a cent, all the way up to $30 and then a consistent downtrend. I am currently invested in this company, but I do believe in them for the long term. So who is Voyager Digital? They are a crypto brokerage, and they've been seeing a lot of downfall in their stock price because of things outside of their control, like the entire cryptocurrency market. We have competitors for Voyager, like Celsius, making incredible moves upward in their coin price, but the company, not allowing withdrawals, it's not really what you want to see. So Voyager is still seeming to do pretty well, and if you go into their investor presentation, you can see a lot of good information on this company. But they have a market cap of roughly 313 million Canadian dollars. The stock was up 20% alone today, which is incredible. Now, they have a profit margin of negative 12%, quarterly revenue growth up 70% year over year, and their revenue is kind of volatile, not kind of volatile, very volatile. It goes up, down, so it's not as consistent as these others. It's one of those more risky plays, especially being a penny stock, over the counter, and things like that. But I do believe in the company for the long term, and I'm willing to hold through thick and thin. But expectations are insane, from negative 28 cents earnings per share to $1.15, and expected revenue growth of 217% over this next year is huge. And then Morningstar is giving this a 71% discount, saying its fair value is roughly $3.56 per share. And this is the stock you've been waiting for, 662% upside set from analysts with 4 buy, 1 hold, giving it an average of $9.34 per share, which is massive. But everybody, that's going to wrap it up for this video. So if you did enjoy it, make sure to give the video a thumbs up, subscribe to the channel, turn on post notifications so that you don't miss out on any of my future videos. Leave a comment what you think, which of these stocks is your favorite, all the good stuff. I always love to hear your input. Check out my Discord server, check out my Twitter, and I will see you at the next video.